good afternoon, good evening, everybody. It is December 29th, Sunday. Tomorrow is December 30th. Obviously, New Year's Eve on 31. I'm back, but I am pretty exhausted. I appreciate that I had a chance to get out there and meet my daughter. Long story about that. A couple of you know it. Yes, I did get paid. Got to meet my daughter out in Ireland and then got to go break bread a couple of times over there with Elongate to formally say our goodbyes, as neither of us have any intention on doing any exhaustive traveling over the course of the next decade. So probably the last chance that we'll ever see each other face to face. So we took the opportunity to go and do that after a 2 decade long multi fucking incredible run collectively. So here, I hope everybody enjoyed their Christmas. I know that you are all ready to get back on the horse and get going, but let me tell you, you got 2 days left. You got Monday, and if you don't have enough money to survive for the rest of the year, then you definitely want to be day trading on Monday. Monday will be let's just say, a full day. And then you have the last day of the year, which is on Tuesday, that being the New Year's Eve. Because of the time difference, I'm not going to be here. I've done it year after year after year after year where I've been there for New Year's Eve, taken a break right around that morning session so I could go outside for 10 minutes, 15 minutes, watch the fireworks, go back in, go to work. It ain't worth it for me. You know, I'm 52 fucking years old. So Tuesday, I'll get you an email out. I'll get you an update going, but nope. Ain't gonna happen. I ain't gonna be there in the chat room. I ain't gonna be giving out no nano alerts about here, there, and everywhere else, because you got a big, big opportunity right in front of you, and it's called 2025.
You smell that? What is that?
What?
What's that smell?
The cologne?
No.
Opportunity.
So quickly, looking over here again, you had 2 red days in a row. Nice little move that you had there on Friday. You know, seeing that nice little dip there on the 27th. Big gap down. Take advantage of that. Gap down. But you got 2 red closes in a row. So I'd be really careful about that. But, however, you know, we are going to just give you a little bit of insight as far as that goes. Because, again, this is what it is. And it will always be what it is. You have 2 red days in a row. Getting 3 is not something you really want to look forward to. However, just to unhide some of these rows, looking at the end of 2023, the final day of 2023 red. Okay? Just take note of that. The final trading session in 2023. Come back over here to the final trading session of 2022. As we were already in our bounce. And again, boom, red. Not a huge down day, but a red day. Again, end of 2022. Go back up here to the end of 2021, which is what I have been mentioning for quite a few months now. That's what this is very much looking like. Because this is looking very much like 2021, once again, I just reference you back here to 2021, where your final trading session of the year of 2021 ended red. That's all the significance I'm talking about. And as you can see here, just pointing out, 2021 ending the year up 26.6% year to date, up 27.71% year over year. And going back to 2020, a lot of you remember, because this is when most of you, not most of you, I apologize for using that word. This is when a lot of people began trading. And that was because they had just got into it because of COVID. The year of COVID 2020, we ended the year up 15.76%. The year over year number I never bothered to go back and calculate on it because it just wasn't significant for me for what it was that I was looking at. But anyway, that's what you have. So again, the Tuesday, December 31 session, highly advantageous, especially after that big sell down and bounce that you had there on Friday, that you would be looking for a red close on December 31. That's all that I'm pointing out for you. And again, if you don't have enough money to survive for the rest of the year, then you probably want to be day trading and taking advantage of these next two trading sessions, Monday and Tuesday. Going on to the QQQ. Let me go back to the SPX real quick. We got rid of it. You had your 2 red weeks in a row. We got rid of it. We got our green week last week, plus 30 points. We are down 1.15% on the month, which is why I continue to post that hashtag 6040, which you saw there on December 24 and again there on December 26. My personal preference is that we close the end of the year above 6040. That's only my preference. And the only reason I say that it's my preference is that I don't want to waste a red month on some bullshit minus 1%. That's all. That's the only thing it is. It's like wanting your favorite wide receiver to catch 17 touchdown passes when you have all the fucking bingo slots on your card for the Super Bowl. That's all it is. It's got nothing to do with technical. It's just a personal preference is all that it is because it's a red month. And I don't want to see us waste a red month. So I've wasted enough time on that. Again, green week, ended that streak of 2 red weeks in a row. Got that out of the way. 30-point week, not very good. 60.49 being your top. I'll get to the chart in a minute. So anyway, coming on to the QQQ. Again, big, massive down week there, quad OPEX. Got your green week. Got that off the books. Nice, beautiful hint, clue of what's going to be coming in 2025 with that big minus 2.2% down day there on Friday, December 27th, where I will drag over here for you. Having gotten back in at 7.99 over on the QQQ 500 puts for March 21, I hope that many of you were satisfied with one day and you are up 40%. So, again, I see a big picture on the QQQ, and we have not yet started 2025. Coming on to the Russell 2000, the Russell 2000 as well, having had 3 red weeks in a row, got rid of its red weeks with that green week, plus 0.65 points. Pretty shitty, but they did it. Still down minus 9.24% on the month. QQQ is up 0.43% on the month, whereas you have your SPX, like we shared there, minus 1.15% for the month. So enough with this, because this is going to be really quick. SPX, here you go, and you had your big FOMC sell-off, bam, bam, minus 4.38% from the all-time highs, and then we had our bounce, and what did our bounce look like? Well, you have your big gap here to be filled, very obviously, from Thursday, 6,006, 6,037. From a technical point of view, we did not wipe out the possibility of another move up. We don't know if this was the A wave. We don't know. We do know that we had an ABC perfectly right up to that 60-40 area, and then you had your sell down there on Friday. You did break down below the A high, but you have not broken down below the B low. The B low being down here over here at 59.02. Didn't break it. Getting back up above that 59.76, more importantly, getting back up above 6,009, that would be your indicator that you have a little bit too much euphoria going into the end of the year, which needs to be moved, and you have your big gap up over here. Again, we haven't satisfied anything, and we're looking at the last 2 days of the year. There is nothing to go and glorify any kind of massive position on other than what we have already discussed going back from weeks and weeks and weeks ago. Coming over here onto your VIX. Your VIX, boom, 1811. There, your Viagra stops and your Viagra falls off. And what did you do? You winced down on Friday, crushed your VIX, even though you had your sell-off there happening on the market. And you're back down below 1622, and you're down here in the 15s. And even though you do gap up on a Monday, I'd be very cautious about trusting the VIX to give you an indicator that you should be getting short, because once again, having gotten as oversold as we didn't break down anything. We came down to the 50-day moving average. We came down to the 23.6 retracement, back down to that 59.35. All we did, to the 54.02. We came down and we dipped and we hit the 50-day moving average and we bounced right up off of the 50-day moving average. And that is going to take a little bit of work, and that's not going to happen on a final day of the year. It could, but, you got your gap up here above 6,000, 60.40. That's the area of interest. I would not chase it. I would not chase it. I would not chase it. I would use it as an advantage in order to be able to get short once again and sell into the resistance, or do credit spreads like we always do. Over here on the VIX again, 1811, down, minus 16.22, not looking good, so you've lost the thrust on that. Over here on the QQQ, again, you have your big gap to be filled from over there the other day, plus above 528.61. No 50-day moving average coming into play over here, and no break down below that B low over at 516. Little dip, nothing but that, and then here we go. Now we are looking at where are we going to be able to bounce up into, because again, you had your dip, you had your sell-off, and you recovered almost half of it within the course of the day, off of that low there at lunch. So, again, I would be suspecting that you are going to be looking at QQQ 528.61 in the early course of this coming week. Your Russell 2000 is fucked. It's completely fucked. Minus 50-day moving average. Breaking the 100-day moving average, and the 200-day moving average slowly creeping up. Your Russell 2000 is fucked. Same thing over here with your Dow Jones. The Dow Jones is completely fucked. Hasn't had that major sell-off yet, but it is completely and absolutely fucked when it comes to looking at this and getting into a position saying, I'm going to be bullish. You're an absolute fucking idiot looking at it like that. Which again, I bring you over here to the US dollar and the Japanese yen, which broke up above 157.70. And again, they are going to be raising rates over here in Japan, and that is not going to be good for anything to do with the currencies, especially the yen carry forward trade, as you've already had your bullish crossover, where you had your 50 crossing above the 200, and you are going to be pushing into that 160 area in the early part of Q1 going into 2025. So buckle up, Buttercup, because 2025 is looking a lot like 2022. Come over here on your dollar and you see your massive spike over here on your dollar above 107. Nothing is going to get fixed until the market has a crash. Crash doesn't mean it's going to happen in a day, but the market is due a massive reset to the downside. And then you bring it over to your TLT, which I'll spend a minute or two on, and that's about it. Because again, everybody out there is now starting to learn about the inverted yield curve uninverting. And what does it mean? What does it show? It's shown historically. You are fucked. Whether it's 2007, whether it's the dot-com, or whether it's COVID, what is coming with the $7 trillion that Jerome Powell and Janet Yellen all bundled up so that they could give away the presidency this recent election? Just give it away. Democrats don't want nothing to do with it. And $7 trillion needs to be refinanced this year, 2025. When you come out here, again, knowing your yield curves, all of your charts, you look over here on your TLT as to where you're breaking down, and once again, this is simply a indicator for you to understand what's happening over there in the bond market, but you are fucked. So again, as we go into the beginning of this week, I would not be looking for SPX to be breaking down below 59.40 Monday or Tuesday. I would expect that it goes up into the 6,000s, but then again, I would not be betting on it. I would let them show this weakness. Anytime you can get a pop to sell that credit spread for the weakness, I would not be playing on the bullish side of this. And once again, as we are getting ready to go into a brand new year, get those drums out, boys and girls, because you are going to be banging and banging and banging away all through 25 if you're going to be with me, because I will make sure there are a hell of a lot more Ricks in the room.
They told me, power up a pom pom. Merry Christmas, CMA Country Christmas. A newborn king to see, power up a pom pom. Our finest gifts we bring, power up a pom pom. To lay before the king, power rumpa bum bum, rumpa bum bum, rumpa bum bum. So to honor him, power rumpa bum bum. When we play for you, power up a pum pum on my drum, yeah, the accent. He smiles at me, power bum bum. Me and my drone.